And we're going to look at this market here and see what's going on. All right. So this is GBP USD, and we're going to have a look at this market and see what has been going on. All right. So GBP USD Rwanda 1 week chart, we can see this energy. All right. You can definitely see this energy here, whether we're going to take from here. Yeah. Or we are going to take, and we're going to do this. So right, everything, the bottom end lines are not that important because we're miles from there. Right, we're miles from the bottom of the range. We're definitely at the top of a range. And it's just a question of whether or not we're going to respect this hard edge. Okay, we're respecting the ceiling, this premium level. Yeah, or we're going to be like, nah, we just don't care about it. Okay. So we're having a look there. The market from this point here did push up, making some higher highs and higher lows. Now understand why I've drawn a line like that. I'm not going to repeat it because it's touching the last low before the highest point, and then the market has made a retracement and is trading within this range. Okay, here and here is trading within. So therefore, right now the market has the potential to push up further, okay, or to push now within this range. We've seen consolidation and we've seen sideways action again. If I go to my daily time frame and have a look here, within this range, yeah, we've seen the market in here, yeah, because it pushed down here, broke structure, came back up here, consolidated, pushed down here, didn't continue, but it corrected and then came here and decided it wanted to push back up into this level, grabbed liquidity from above here, and then started pushing down, yeah, but then started pushing back up in here. So at the moment, this market is, you know, within this range, we're getting some higher lows, and ultimately we're getting some lower highs. So we're just ramping. All right, we are ramping in this little area at the moment, and it's not something that I'll be fast trying to get involved in. Just keeping it true. So I'm not overly excited about getting involved inside here. I'm expecting this market to be bearish. Yeah, but for all I know, this market wants to push back up into this level first and then do something else. Maybe it wants to trade within this range. I don't know because it hasn't been confirmed. This, if I had to draw some lines, this would be the line, like so, taking this as the highest point. Okay, taking this little level, and I'm going to put the top end in, taking this as the highest point. All right, but we pushed up here, then the market came down. Yeah, the market came down like this, and then pushed back up into these levels here. So at the moment, it's like, it's just rampant. Yeah, it's really rampant. Let's go and look at something else. I don't want to look at it anymore. I'll pop an alert in here. In fact, I've got some alerts in here. I don't want to do. I'm going to delete all my alerts because I just got lots of alerts sitting around from all of our session. Remove all, not only inactive, but I want to remove all active alerts as well. No problem. Okay. Like that. I'm going to put in another one here. I'm going to put an alert, add an alert, crossing up here. And I'm going to add an alert, starts to cross down in here. But apart from that, I don't really care about this market at all. Let's go and have a look at Euro JPY. No wonder. All right. Okay, so look at our lines, you know. This is why sometimes we come back to these markets, we have a look at our lines. This market is still in here, trading within this impulse of a range. We're at the top of this blue range we spoke about the other day, which might be in its premium, and we might see a reaction from there. If we go to the 4-hour time frame, we've seen how the market has come from up into this premium level, the ceiling. We had this big push that we was talking about, yeah, and then we've seen this retracement back into this level, closing the imbalance, and then the market started to trickle down here, and we've got down to this point here, and if I look at it on a, let's get rid of this, we try and see structure. The structure that I can see is a market from up here, coming down here, going up here, going down here, and we're currently up here. We are making lower lows and lower highs. I would like to see this market do this, push down here without breaking this high over here. Let me look at it on a smaller time frame to see if I can see anything interesting. Yeah, there's a little bit of imbalance in the market. It's just maybe sitting in right now. Have a look, sitting in here. Yeah. If I was to draw some lines of this little impulse, we're looking like this-ish, yeah? I'd like to pop an alert over here if that market starts to break down. And though it's not in the best of places, and put one alert there, And I put one alert crossing up. It's not in the best of places because it's kind of in the middle of this bigger white range. But I'm thinking to myself, there's a possibility this market wants to pong and get down to this white line and hopefully keep going. Why do I say hopefully? Because hopefully we're in the top of this premium level, this big blue box, and the market wants to get down to a discount. Well, I don't believe it's going to get all the way down here to this discount because fundamentally I don't see any massive reasons for the market to do that. But at least within this range, the market may want to get down to this white or orange line, or maybe even to this blue line. Okay, either way, I'm bearish on it. Yeah, so there you go. I've given you my outlook for that. Let's go have a look at BTC USD, and I've got some alerts in there. I think I put in. Did I put in alert? Am I going mad? I think I did put in alerts. Yeah, I put in one. I put in the alerts. Yeah, I've got 2 alerts in there. Fine. Let's go to have a look at BTC USD. Oh, in fact, let's look at gold first because I think more people probably trade gold than BTC USD. All right, let's have a look. How? Once again, always the same. Starting off, overstanding what's been going on in the market. All right, zooming out, seeing what's been happening. All right. How? So this might be a bigger range, like so. Okay. We can see this acceleration of this market doing something like this. Something like this. And I'm going to make those to a different color. If I drop my time frame down to the daily, all right. So we can see on the daily how this market, if we want to draw some lines, was down here. I'm going to make all these lines like white and dotted, you know, kind of did this. This is another little range, possibly. Let's have a look. Now, when I say possibly, what I'm looking for is after that data point, the highest point, has it violated those levels already? It has, you know what I mean? So this was an angle until we've seen this amazing push up from here, from down here like this acceleration like that. How? And let me look at the levels, probably be like this. This is the highest point, this wick in here. So the market is trading within that last little range, like a missile going up. And since then, have a look on a daily time frame, but have a look. Market came up to this level and started to push down here and break some structure. Now we're trading within a range at the moment, which is from this high and kind of in this little level in here. If I go to my 4 hour, let's have a look. See how the market came up in here. I would have had a line like this, started to break down here. We got to the bottom of this range. The question is the market just going to be trading down nicely, just turning around, deciding to trade down bearishly, like this? Or is the market going to, do the hokey cokey for a little bit of the, maybe the market comes back up to this yellow line. And is there any other reason why you guys can see that this market could come back up to this yellow line? Obviously, we're down here in a premium, so in a discount of this range. But is there any other reasons you can see this market might push back up into these levels? Like if I was to draw it, like maybe doing something like this. Can you see any other reasons why the market might do that?
Yes.
Go on.
Close the imbalance.
To close the imbalance. All right. So over here, we can see there's imbalances in here. All right. You can see there's imbalances in here. You see all this energy in the market might decide it wants to come back in here to close the imbalance before pushing down. It may do. It doesn't need to go and pay this bill. Maybe it comes up here and maybe it comes up in here and just touches into this little imbalance and then decides to go. All right. Maybe it goes first and then later on comes back for this imbalance. Who knows? But this is a concern I'm having. Like for me to sell right now, whilst I'm still in this yellow range, and I haven't broken out of it, and we're in an absolute discount where there might be buyers coming in, doesn't make any sense. I have to wait and be patient to see what happens. And what is it I'm waiting for it to happen? I'm waiting for either the market to break outside of the range, like this, outside of the range I've broken. I'm doing this. Or for the market to close this imbalance first and then start breaking some structure. Lovely for me to get in from all the way up here. Yeah. That's what it is. That's what I'm waiting for the sell. If for example, the market doesn't give a damn about me and the company's up here, breaks this structure, I'm waiting for a correction, then a continuation. And ultimately, I'm waiting to see it run these heights. Because once again, I don't want to be taking a buy right at the top of the premium area. I would prefer to see it do this and be taking trades here, saying, okay, it's just going to the moon and wants to keep pushing up. All right. I hope you understand that. So for here, what am I going to do? I'm popping an alert over here when this market starts to push up. And I do think it's going to push up and close this imbalance. It just looks too appealing for it to want to go and push up there. And I'm putting an alert below here. Cool. I'm going to look at another pair, GBP, NZD. All right. Once again, I go to my higher time frame. I want to know what GBP, NZD was doing previously in history. I'm not just going to, you see like how I was over here? And I think to myself, oh yeah, this market's really going up and up and up. But when I zoom out, I get a much bigger picture of, wait a minute, though it's going up and up and up, we may be approaching a much bigger, higher time frame ceiling for this market. All right, we may be approaching some much bigger Russian doll ceiling for this market. So if I draw some lines in like so, remember, and these are just lines. So just lines to let me know how I've gone. So for example, like so. So we can see this market by my lines that I've drawn that's been trading within this range. Okay. Now, you know, it is looking bullish. Just the market making slightly higher highs and higher lows, but maybe that energy's done now. It's kaput. Yeah, and maybe it's going to stay trading within that yellow range. I don't know. I really don't know. If I drop my time frame down to my daily and get me some more information, I can see how this market has been. It was down here, kind of was going sideways a little bit, some sideways energy all the way across, kind of all the way across here, you know, wasn't necessarily doing the most. All right, all the way across here. From there, we've seen this push that pushed all the way up in here, or pushed out here, came back down. It's just fraffing about. This is fraffing about for me. Yeah, it's fraffing about because even here, as this market's pushed up in here, pushed out, made some small indication correction continuation. You could have caught a nice little trade here. I think maybe I did. And then, but look, we've come up to this little point here. Then we decided to come in. Now it's broken structure in opposite direction. It's broken this structure. Come down here. Now it's making lower lows, lower highs, and lower lows. And it's come back up here. It's making equal highs, higher lows, and now higher highs. It's fraffing about. Yeah, I'm not going to be in a rush to get involved in this extra bit of fraff that's going on in here. All right, I'd prefer with this market that it's respecting this line here, and we're going to see it fall from this premium and just start doing some energy like this. I prefer it just clean up all of this nonsense. We'll just clean it up. Yeah, at the moment, it's just like, oh, I didn't get my camera on. At the moment, it's like, it's just, it's a mess. It's not something that I'm going to be in a rush to be going and getting involved in. All right. Let's go for another one. Let's go for, just thinking some random pairs, Euro GBP. Then we go into some of our indices real quick. All right. So from Euro GBP, I'm zooming out. Again, I'm deleting everything. You guys are seeing how quickly, and obviously I'm still teaching to an extent, but how quickly I can fly through these markets and at least make a decision of whether or not I want to get involved in it. Yeah, do I even want to bother putting an alert in or not? You know, is it worth me putting in an alert or not? Yeah, like, yeah, this is the speed of how I'll clap through these. To be honest, I won't even do that. I'll just open it and look at it in my eyes first to be able to see whether anything looks interesting. All right. And be able to see if I'm at higher, you know, top of the top or whatever it may be. Now, once again, Euro GBP, I'm looking at it. And on the weekly time frame, at the moment we're here. And like I said to you, weekly and monthly, all them kind of massive time frames are not necessarily going to affect your trading as a day trade. Don't get twisted. They're not. I'm not saying not going to affect it. They are if you're at the extremes, yeah, because there's that kind of pressure. But I'm saying to you if you're not in the extremes, there's still opportunities that can be had. It just, like I said, you just need to have a picture of what's going on, in my opinion. You have to know what's going on. You have to be able to say, okay, this is what the market's been doing, and this is what it might do. And you're not going to be able to do that by just, you know, picking up on an hour time frame and just going for it, right? So now on the daily time frame, now you're in action, now you're in play, now you're watching things, All right, because on a daily time frame, I'm watching things, even though I've got these outlook. Because look, even though on a daily time, I can see certain things happening. The market was going sideways in here, broke out, indicated, have a little bit of a correction and continue down here. Even though I can see that happening on a daily time frame, on an 8-hour time frame, sorry. I'm also a bit concerned about being at the bottom of this range. And I'm also a bit concerned about the fact that we ponged. Do we not want to ping and get back up to this yellow line? See, that's running in the back of my brain. If I didn't do that from a bigger time frame, I wouldn't know that. It wouldn't be something that's in my head. So there, though, obviously on a smaller time frame, it's looking like from here, if I was to draw a little box, however we want to draw it, in here, that the market has decided that maybe it wants to come out of that box, making some kind of indication-ish. Not even. On a 4-hour, it's very wicky. Can't even see any nice clean closes over here. On a 4-hour, look, I haven't even drawn this box very well. It's mostly like this. I haven't seen some nice clean closes. This is all wick action, wick action, wick action, wick action. The first close that's happened is here. This is the first indication. So in my opinion right now, a correction could occur back into these levels. These are imbalances. All right, correction could occur there and then it could continue. Or this could just be that liquidity grab and the market wants to float back up into these levels. All right, because maybe that's what it wants to do. Float back up into these levels, up into here. Maybe 50% of that previous consolidation range, where we can see this imbalance, all these red candles. And then maybe from there, we might see this. Or we might see this. Let's see, actually, not even that far, because we're at the bottom of the range then. We get into buy territory. So maybe we see that energy first, and then it decided it wants to do something else. Who knows? All right, who knows? I'd say right now, and more say with the energy of, we might see a retracement here for today, back into these levels, because this is the daily time frame. So I'd be dropping my time frame down if I really, really needed to take a trade. This is the 4-hour, and I can see that this market has potentially started to break some structure. Look, come down here to this lowest point. Look at this wick. This wick is a reversal candlestick implications as well. It's doji. Oh my God, I bit my tongue. It's doji, yeah? So you trying to chew gum, trade, teach at the same time. Let's take out the gum. I'll bite my tongue off. Yeah, because this is a reversal candlestick pattern. This doji here, this bullish engulfing candlestick pattern. If I drop my time frame down to an hour, we'd be able to see Hagwon if we really wanted to get involved in the trade. Now, for me right now, looking at this hour structure, yeah, we've got some other little minor stuff in here, but this would be more, say, a major little level. You know, have we got a close above there? The close is tight. The close is very, very tight. Maybe just about above this little wick here, but I don't really love it when it's that tight. But maybe, all right? And therefore, maybe we might see this energy back into here, and then it continue to do something like this, maybe, and possibly, therefore, that might be a trade for today, if you really need to trade Euro GBP today, okay? Which is going to be a retracement, yeah, or a correction after an indication potentially into these imbalances that are drawn here. It shouldn't be yellow. It should be labeled with my imbalance label, which is this one and this one. All right. So maybe the market's going to come back down into this area here, do something, and maybe there might be an opportunity on a smaller time frame, 15-minute, 5 minutes to get in for a buy that's going to push up, close some of these imbalances. Is it going to go all the way up to this top imbalance? Well, I don't know. Doesn't have to. It might just decide it wants to come here, but either way, if you're getting a good trade from down here to up here, you know, good 30 pips. Can't sniff at that. It's all good. So I'm going to pop an alert here as this market pushes down into that imbalance. And I'm going to pop an alert above because this closure is very, very tight. It's like I'm forcing it, I'm willing it, I'm wanting to take it as it's a closure above here, but it's not very clean on a 1 hour time frame. Can't lie to you. Yeah, it's not very, very clean on a 1 hour time frame. And it's not clean even on a 15-minute time frame. So I'm a bit, yeah. So what we might see is we might see the market have another little push here first and close and then come down. So if you was to take this market, take this trade without it first closing this imbalance, my advice to you would be to, if you thought, okay, yeah, I'm just going to take it now, it's closed above. Because this closure above this here isn't clean cut, isn't definite, your stop has to be below here for 20 pips. Yeah. If it comes and it closes in balance first, and you get a nice trade in here, but obviously maybe your zone could be something like this. Okay, it could even be smaller than that if you take the aggressive trade below the last low, or this trade below the swing low. Yeah, but if you get in early over here, so that's a difference of potentially like, 10 pips to 20 pips. Yeah, obviously, and then it's to the target of potentially getting 20 pips is the first imbalance. That's a 1-to-1. And then if you're lucky and everything, the stars align, maybe pushing up here for 40 pips. Yeah, and if it's really going deep and doing a madness, maybe this is going to keep going, grabbing liquidity above all of these levels, all the way up to 50% of this previous consolidation, and you're laughing your head. All right. Either way, that's my synopsis for that one. I'm going to do one more. Anyone want me to do one in particular, one I've missed? Anybody want me to do a market in particular, one that I may have missed? If not, I'll just pick a random one. I'll tell you what we do. Just hit space, see what comes next. Euro NZD, let's have a look. Euro NZD. I'm going to delete everything. I'm going to zoom out. I'm going to reset the chart. I'm going to go in here. So we can see here, it's a bit of a funny one, bit of a messy one. The market was down here, did push up first. All right, pushed up, and then we've seen this high. Then we've seen this market potentially, if I was to draw some lines, I don't know, kind of looking a bit like this, coming down. And then we started to do something like this. All right. You see it? Okay, something like that. We're kind of in the middle of that range, doing a little hokey cokey at the moment. See? After breaking some weekly structure. Yeah, the market is doing a little hokey cokey, maybe doing a retracement. Who knows? If I have to draw some lines in here, it's going to look like this. All right, it's going to look like that. And the market could decide it wants to come and retrace back in here. I can't really see any clean areas it wants to potentially retrace that, but right at the moment, it's definitely in here doing some little dance. Okay, so therefore, right now, that market could be in a discount at the bottom of the range, wanting to push back up in here, or it could decide that it wants to grab the liquidity and do whatever it may be. So I would be watching this here to see Wagwan, make a different color, to see whether or not this market is going to be breaking structure up here and deciding it wants to keep pushing up. It's had enough of a retracement, or whether it, see whether it wants to push down. Off this impulse, if I was to measure this impulse, there. It looks like this market, does like some quite deep retracements on a daily. Okay. Looks like it does like some quite deep retracements. So I'm going to identify both of them. I'm going to identify this whole impulse where 50% is, with this whole impulse, like here. All right, is a 50% level. But I'm also going to identify, see these deep retracements to 618, 786. What do I mean by that? I mean, in our Fibonacci, if I do from here to here, that retracement came down in here. Look at that, 618, 786, right in the middle there. Yeah, let's go and have a look again at this impulse here, from down here to up here. You can see this retracement came where? Right between the 618, 786. So it seems like it likes the 618, 786 for some reason. So let's have a look at this last impulse from here to here. That market could get down to the 618, 786, which also happens to be 50% of the bigger impulse. So I'm thinking to myself, there's a very high possibility, based upon what the market has done, maybe it wants to come in here before deciding to do anything. All right. So that's kind of informed my potential decisions. And if we can see here on this, the market currently on a smaller time frame, let's go to an hour. The market currently pushed up into this level up here. Pushed up in here, and then it came all the way down in here. Euro GBP is breaking some structure. I'm gonna have a quick glimpse at that. I'm gonna finish up. Okay, potentially breaking some structure here. But I'm gonna pop a little alert below here. I'm thinking to myself, maybe it may want to keep coming down. I am a bit concerned by this kind of energy. Again, vice versa. The market might want to push up 50% here, or 618. I doubt it, because it's a bearish market. It shouldn't want to bounce all the way up to the top in here. but I'll pop an alert in here anyway. I'd really like to see that coming down, to be fair. It make more sense to me coming down, breaking outside of this box and keep or getting to this 50% area. So how far is that? Maybe 150 pips. Yeah. That's what I'd like to do. And have a quick look at Euro GBP that just ran here. See what it's doing. It's coming down to close that imbalance. So look at my lines that I've drawn in here. Look. Yeah, it's like I told it what to do. Okay. As it market is coming back down in here to close some imbalance. Okay. On the front, on the point that maybe when it gets down here, it's going to go and it's going to turn around and push up. All right. So we're watching this, and if we wanted to, I really should have put written in here all of my ideas. I've got my alerts in there, but I should have written all the ideas down. But you guys have been watching me, and I'm sure you've taken notes of whichever are your favorite pairs. But we've done a lot of pairs this morning of potential trades that are sitting around. I did say this is a great possibility. And whilst we're on the call, we've heard this ringing alert coming in here, pushing down into these levels. Personally, it'd be nice to see what this market does, how it closes this imbalance, and whether or not it decides it wants to turn around and start breaking some structure on the basis of, on a larger time frame, the market's making a correction of this indication, and it might push up into this imbalance or beyond. And if you're really lucky, even beyond that to 50%, which is this line, approximately this line, because it might not be the way I've drawn it, of the previous consolidation. All right. Maybe. So we're watching it here. It has so far, it's done as it's told. All right. Okay. It was up into this level. It's come down into this imbalance. And maybe if you're savvy or lucky enough, you're able to watch this trade here as it's, at the moment coming down at this kind of trajectory. All right. At the moment. Okay. And see whether it's going to come down in here and close the imbalance, and whether you're going to get some 5-minute breaks of structure. I don't know. You may not. You may have to go smaller to get the data. I think 5 minutes is cool. Don't go any smaller. Keep an eye on it. And you might see this market come down in here. It might even do a little trickle. Might do a little trickle, close this imbalance, and then it might decide it wants to, and it's ready. And if you're there and you're able to get in a great entry in here on the basis that this market's you're buying from a discount, this market's coming up to this premium, hopefully it busts straight through this premium, closes this imbalance, and hopefully keeps going to this imbalance. And if you're really lucky, you're holding this maybe to tomorrow, whatever it may be, and it's going and it's trying to get up to this kind of around this 50% area. All right. But either way, I'm not saying it's going to go there. And either one of these are targets, but either one of them, you're in good profits. You're definitely risk-free. You may have even scaled in and added to your position, and you're managing a trade. All right. But we shall see, because we read and react to what the market does. All right. We cannot just tell it and will it to do our bidding. All right. Guys, that is it. Our action-packed power session. We went through a lot of pairs. Did you guys see how quickly I was analyzing these pairs and coming up to these conclusions? Hopefully you did. See how quickly I was running through and being able to say, okay, this is this, this is that, don't like this, do like that. I ain't got all day. All right. I know what I'm looking for. I'm really looking for the best trades. I'm not looking for every single trade. I'm looking for the best trades. And some trades straight away, I'm a bit like, yeah. If my arm, you hear me say, run the tape back. You hear me say, if my arms were tied behind my back, if I had a gun to my head, maybe I'll do this. Do you understand what I'm saying? Yeah. Like, I don't want gun to my head trades, to be fair. I want trades to say, yeah, this one's looking good. It's looking very interesting. When I hear my alert ring and it breaks its structure, I'm definitely in for the sell. That's what you want to hear me saying. If I'm not saying that and you're still taking trades in there, that's cool, but you manage your risk accordingly. Yeah. And you watch it accordingly. When I say manage your risk accordingly, when you get into profits and you're not 100% sure of what it's going to go and do, make it risk-free. Worst case scenario, you're going to get stopped out for nothing. But when you're stopped out for nothing, you're able to get back in when it then shows you that it's going to go in your direction. Unless it happens very, very quick and you're not able to do anything, but more times it won't. You see that right now, I could have hit the button up here, like I said to you guys. Yeah, on my stop down here, but why? Why when I can wait and have a look and see what it does? All right. Anything anybody wants to say before we finish up? This is the power session. Anything anybody wants to say before we finish up? All right, it's a power session. I hope you guys are seeing the way man analyze the markets very quickly, and you're going to be able to add that to your flow. Sometimes when I'm teaching, I stop and it gets a bit disjointed. But when I'm looking at markets, I'm able to just look. If I click space, it should just flick to the next one. GBP NZD, I'm able to just zoom out, boom, straight away. Have a look at it. You know, do I like it? Does it look interesting to me? You know, if it's yay, I get involved. If it's nay, like from this perspective here on a daily, we're maybe at the top of a range, but we're in the middle of a bigger range. I don't know. Who cares? You know, I look at NAS. Okay, NAS is bullish, pushing up, boom, 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 potentially. In this range here, it's not drawn that great whenever I drew that. But let's say for argument's sake, we draw some more lines in here. You're having a look at this range, seeing where we are. Again, a bit meh. Let's go again. Euro USD, like on a bigger picture. I think we didn't do this one. On the bigger picture, this market here, Euro USD. Oops, where did those come from? All right, it took long to load, it seems. You know, we potentially are near the top of this range. You know, this is looking interesting. The market's consolidating as well at the moment. All right, on a much bigger time frame, it's going sideways. You know, and that allows me to turn around and be like, okay, that sideways energy, you know, gives me an opportunity to find an entry. All right, this is the bigger range, but on a smaller range, we've seen some energy was happening in here. If I drop to my 4-hour time frame, you can see how the market was kind of in here, doing a little backward step, forward step, backward step, forward step. We just broken outside of that little backwards and forward step range from a potential premium of a larger zone. We might see this is as an indicator, or this is an indication. So therefore, what's coming next? A potential correction like EJ, or was it EJ or was it E? What the one we just looking at? EG. We're looking at something anyway. We might see this market correcting today, pushing into maybe some of these levels, maybe even all the way back up into these levels before deciding to do something else. If I wanted to get into this trade, I'm looking here at what's been happening. What's been happening, this market's been coming down like this. This market's come up to here, and the market has currently been, it's trading within here and here. And on a smaller time frame, it's been kind of doing the hokey cokey in here, you know. And if we look at structure is right there. Is that a coincidence? That right at structure, this market's just been dancing. It's not a coincidence. So therefore, I want to put an alert, another alert when that market closes above structure to show me what it wants to do. That's simple, guys. Swear down. Like breaking down these charts, I love it. I could do it all day. All right. But then the next phase is how do you enter the market? So the next phase is managing your trade. And the next trade is win, lose, or draw, being able to take that on your chain and continue. Anything anyone wants to say? Anything? Anybody?
No, I'm just listening to you still.
Wicked. But that's what we got to do. Like we go in there, we have a look, bully around. What you can do is do the same. You don't have to finish your session right now. Keep your computer open, look around, see, come to some sort of conclusions. And more you could do, which we didn't do, but it would have taken up more time, is open your little text box and write in here your little opinion about what's going on. And then you can see afterwards whether you're right or wrong. I do that with my lines sometimes, but sometimes it gets confusing because I put in there multiple scenarios of maybe the market not doing that, maybe doing something else. So maybe you might not remember, but write in what or if you was journaling, which we're gonna start going really hard with our journaling, guys. All right. Like being able to journal and write stuff down is very important. I don't think you should be journaling from the jump when you don't know what you're doing. It doesn't make any sense. Journal about your journey and what trades you might take, even though you don't know what trades you might take. That doesn't make any sense. But now you know what trades you might take and how to break down the markets. Journaling, writing down, you know, your ideas, your opinions, what trades you took, how you felt, did it go to TP, what time was it, what market is quite important. You can also do that from your history, as being able to look at your history to see what trades you predominantly take and what times predominantly you take them. Are all your profitable trades after New York opens? Are all your losses before New York opens? You know, if that is the case, then bro, trade after New York opens. Yeah, the numbers don't lie. Well, guys, good morning, God bless. Thank you for being here. Sorry, it was such a power session. I have a
Thank you. No, it was a good session.
Funeral to go to, which I'm going to go and attend real quick. But what I am going to do is, in the meantime, I will play a video. Is a traders roundtable 11 days ago. To be fair, some of these traders on the table, I don't really rate them at all. I found them out, and they don't really get me going. All right, but let's see what they got to say. All right, this is some faces. I think they're more than the Instagram models of trading. I don't necessarily rate all of them. A few of them on the table, but let's see what they got to say whilst we are getting a little bit of knowledge.
You're a scammer.
Scam,
Immediately.
I will leave you guys to it, guys. Have an absolutely fantastic morning. I'm gonna go throw on my shirt and have a great day.
Love my bro.
Make
Nowadays-
$1 other than trading
Yeah,
scam. It's like,
yeah.
bro, you ain't got
Bro,
no
that's the
money.
thing.
Like, it's
That's
like,
the
what?
thing, bro.
Like,
If you make any single cent anywhere else that's outside of trading, oh, it's a scam.
Yeah, it's like,
It's a
bro,
scam. It's like, am I a scam or am I smart?
Before we get into the episode, I want to let you know that Words of Wisdom is going up to a whole new level. Already, thousands of traders have gotten funded, become full-time, and have completely changed their trading game thanks to the podcast. And that is our mission. Our whole mission is to give you as much value as possible so that you can be the best trader possible. Now, the first way of you being able to do that through this platform is making sure that you're subscribed and hit the notification bell so you never miss an upload. On top of that, I've created a free Telegram group where I am giving discounts, giveaways, free technical course, free mindset course, everything you can think of is in that Telegram group. The link's in the description. Make sure you check that out. As well as we're taking things to a new level through an email list. We're going to create an amazing e-newsletter and we're going to be giving as much value as possible through that, whether it's technicals, fundamentals, psychology, you name it, it's all going to be in there. Links in the description. Now let's get into this mega episode. Welcome everyone to the Words of Wisdom podcast. We are back once again. We are still in Miami and we are still the #1 trading podcast in the trading space, thanks to all of you and our incredible guests. Talking of which, we have some absolutely incredible guests with us today. Another roundtable just for all of you. And we have Casper SMC, we have JCapFX, we have Lambo Raul, and we have Q Banks. First of all, thank you all for being here today. And I'll just throw it out there straight away and we'll start with you, Casper. Very simple question. Like, why did you get into trading?
So, man, first off, thank you for having me on. It's a pleasure, as always. But, man, so when I first got into trading, it wasn't really trading as much. It was more just buying crypto and holding it, right? Like, I had friends that were into mining it, and they would just tell me all the time, like, oh, you need to get into this, you know, this and that. And I had no idea, really, like, what any of it even meant, right? I'm just like, okay. This was back when you had to buy Bitcoin off something called local Bitcoin. Or they had other things, too, but, like, literally you had to buy Bitcoin, like, in person from, like, somebody who had Bitcoin. There were other ways, you know, there's, like, Mt. Gox and all that stuff. But I bought Bitcoin, right? Just put whatever I had into it, kept buying it, and then it blew up, right? So I got super lucky. And then I was thinking, okay, you know, I'm a trader, right? Like I made some money, I'm gonna keep doing this. And pretty much over the next couple of years, slowly round tripped most of that, dumped more money in, lost it, just kind of kept back and, you know, going back and forth. I never really took it seriously though, right? And I was working a sales job. I was doing like solar sales, I didn't really like it. You know what I mean? Solar sales is not really, it's not something that's fun. It's not something that's eventful. And then COVID ended up coming around and I started seeing like more ads. Like I remember it was a Snapchat promo of all things. It wasn't even Instagram or Twitter, YouTube. It was this group that now I'm an owner in. They basically were paying for influencer shout outs. So they were posting all these gains, you know, like, oh, this is actual trading. Cause I had been like, you know, trading, but I wasn't really trading, right? Like I was just like, you know, no risk management, no actual strategy. Like I'd watch some stuff, like I remember like Trading 212 and like those basic, you know, channels you're really not gonna learn much that actually will make you money. But I started trading in that Discord, I joined it, started taking it seriously and started understanding like, oh, okay, there's actual structure to this. You can, you know, there's actual risk management. Started learning other strategies than like ICT and SMC. This is just, you know, basic like fib stuff. But yeah, then fast forward a couple years, here we are. But that's how I got started originally.
Yeah, so I actually got into trading. It was just kind of like random. My close friend from kindergarten actually, when I dropped out of college, he was still at home, and he kind of invited me over to his place down the street. And they were kind of trading Forex at the time. And this is like right around the Fukushima power plant explosion. And at the time, I didn't, you know, I knew what the stock market was and stuff, but I didn't realize like people were actually going short and long in the market. Like you can make money both ways. Just seeing like that terminal, and interestingly enough, the MetaTrader 4 terminal is the same as it was back then, you know, 2011. But the reason why I stuck with it was because like it seemed like an easy way to make money, right? Like everybody gets into trading because you can click a button and just make money like almost instantly. But yeah, little did I know that journey was going to take me, you know, however long it took me to become profitable, which was like close to 7 or 8 years. And thanks to the prop space, it allowed me to like leverage my capital more so than I'd be able to just working a regular job, you know, because I wasn't like an A+ student. I didn't have like super high grades, so I never really got like that career start that I wanted. So I kind of had a slow career start after leaving college. But yeah, I've stuck with it ever since, and yeah, kind of.
Here we are today. That's it, yeah.
Yeah, my story's pretty simple. It's a long one, so I'll try and summarize it as best as possible. The original career path out of high school that I wanted to go to, I was no longer able to actually do because of a medical diagnosis that I had. So literally one day online, stumbling upon how I can make money online, I came across day trading. And that's basically where it all started for me. Like, I already knew kind of what the stock market was. Like, I had a general idea. I thought people made money in the stock market by just buying stocks, holding them, and then when they went up, they just cashed out and then moved on to the next stock. That was my overall ideology of what trading was, but I didn't know it got this intricate, nor did I think it would actually take me this far, you know, years down the line. That's kind of like a short story on how I got into day trading.
Yeah. So with me, I mean, I was first introduced to trading at 20 years old. Stock options first. So I was, you know, in that field first. And then I kind of put it to the side for like a couple years, and then I took it back up at 24. Around that time, like, you know, Facebook was kind of going crazy. Like, everybody was doing something online in some kind of way, like affiliate marketing and that kind of stuff. And some people were also trading as well. I took it back up. At that time, they were doing the market maker method. I'm pretty sure y'all know about it, right? Mm-hmm. And I took it back up. At that time, like, I had some friends that were making like 10K a day and that kind of stuff. Like, I knew that there's some kind of truth behind every single lie, right? So it's not like I doubted them, but at the same time, like, if there's something there, then there's something real there, no matter how small it might be, you know? So I took it up. I joined a group and everything called War 3 at the time in 2014. I stuck with it. I started making a little bit of profit here and there, $20 here, $30 here, that kind of stuff, each and every single day, like, while I was still working at Target. And yeah, like, I kind of like to stuck with it in my group. I became kind of like stand outish in that group, and I started making a bit more and more money over time. And like, since I had friends that were doing very, very well inside of it, I knew that, like, if I stuck with it long enough, I could eventually start making that kind of money eventually. You know what I'm saying? Like, even if it was 5K a day and that kind of stuff, like, and I started making that kind of money in like about 5 years in. But at the same time, like, you know, I knew that this was the only route that I could actually take to like afford the kind of things that I'm actually into, as far as cars, condos, traveling. No other kind of job can actually make me get that kind of lifestyle, you know? So trading was the only way that I pretty much seen fit, and then I kind of just stuck with it over time and everything, you know?
Definitely.
Yeah.
No, I love that. And,
Yeah.
you know, in terms of trading wise, like, all of you, if I'm not mistaken, started, you know, maybe not in the industry you're trading right now. So I think you guys are in equities now, or indices?
Now, yeah.
Yeah, and then you guys, you were in FX and then now into futures.
Yeah.
You in crypto, now into futures.
Yeah,
as
as I
well.
said, I started in crypto, but now I just trade futures like NASDAQ.
Yeah.
NASDAQ ES sometimes, but.
So, like, what's it been like to change? Because, you know, a lot of people right now are going to be going through a lot of changes, more than likely, and a lot of people really resist change in their trading. Like, so any tips or anything that really helped you to just embrace change, or, you know, just kind of accept change?
To be honest, bro, I've always said, like, if you can trade, man. Like, it ain't, there's nuance and there's differences for sure. Like, yes, like, position sizing is different in futures. The way I looked at it, I was like, okay, well, I'm just longing or I'm just playing with a 20 lot per contract to NQ, right? It's literally the same thing. It's just changing your position sizing. Now, if you're changing from, like, maybe trading like London session to New York session, okay, you're changing your times, you're changing a little bit of, like, what kind of strategies work better during some, sessions than other, but relatively it's all the same, bro. Like, I also came from like swing trading at first, right? So I think a lot of people that get started, especially like right now, everybody just day trading, 1 minute entry, 5 minute entries. And I think that then everyone's like, oh, like, how would I transition to swing trading? Which to me is weird, because I'm like, if you can do that, the swing trading, as far as like the technical part, is just way easier. You're gonna have way higher hit rate. But I think a lot of people overthink it. Like, everybody right now, like you said, with all the stuff that's going on with, Forex props and everything, is like, everybody's, oh, what am I gonna do? And I just always tell people, like, if you got the skill, bro, this doesn't really matter. Like, you're gonna have a little bit of a learning curve. You gotta get used to it. But, like, bro, what are you gonna do? You know what I'm saying? If you're forced to change, you're gonna have to change. But I think people overthink it for sure, though.
Definitely.
Yeah, so I actually only made the transition from Forex to futures in the last like month or so, just out of necessity, because obviously I have to adapt. I mean, in my opinion, like, and you had this discussion with Trader Man on your podcast, right? And I think what I'm noticing is in futures, there's more volatility in those markets. So me finding a higher risk reward trade on a day-to-day basis seems a lot easier. So that transition actually seems a lot easier than what most people might think. Like Forex is an efficient market. Like they're global currencies, they have to be stable. So like when you're looking at the euro dollar today, the daily change was 0%, 0.00%. And then you look at NQ and ES, they're up 2%. Like I think the edge in other markets is definitely there. And that's something that I haven't really explored that much. But now going forward, I think it's something that people really should look at, like finding edge in a different asset class that might not be the one that you're used to. Like get used to one, like if you started out in Euro, like there's nothing wrong with taking that skill set and testing different markets, right?
Yeah.
I mean, for me personally, I think change is a necessity, not just to be able to change the new market and adapt to those new market conditions, but even the platforms and tools that are available to you. You know, sometimes it's going to be for the better, maybe for the worse, but it's a necessity, you know, and not just change in trading, but in changing life as well. Sometimes that is a crucial step that you need to take. I mean, for those people who are just too stuck on, you know, the old platforms, such as the problem that's going on with MetaTrader, it's like, bro, if you know how to trade, you could go and trade on any platform if you're still able to execute. Like he said previously, there might be minor differences, but if you could still execute perfectly, then there really shouldn't be too much of a problem, in my personal
Yeah, you just need
opinion.
a buy and sell button, right?
Yeah, that's all you really need.
Limit, stop.
Yeah, so I think like I've had like the most amount of change throughout like you guys here like at the moment, honestly, because I mean, even before I got onto MetaTrader, I was on another platform. Like I forgot like what it's called and everything, but it was like a black and yellow platform. Like back then, it was on Forex Broker Inc. own platform and everything like back then. And back then I was also trading oil. You know what I'm saying? So I started on oil first before any kind of currencies and indexes and that kind of stuff. And then eventually I got onto currencies for a couple of years, and then cryptos for a couple of years, and then traded gold for like about 10 months, and then now it's indexes. So I think I've had to adapt to the markets many times based off of me just trying to upgrade like my trading assets over time, because I see myself trading currencies and then things got too slow for me based on like my ability to analyze like fast and everything. So that's when I went to like a newer pair every single time that was a bit faster. And now I'm on US 30. So US 30 pretty much it gives me the kind of money that I want to make, but also like it's as volatile as it needs to be, so I could actually see the kind of profit that I want to see, you know? So I think it was just more like just me adapting based off like my level of skill, so it could actually level out, because I started being very good at AU like a long time ago, but then I think like I was analyzing too fast and I was trying to anticipate the move too easily, to the point that I would just mess up. So I'll have to go on a pair that's pretty much faster, so it's matching the rate that I'm also analyzing as well. You know what I'm saying? So like I had to adapt to like something that's newer and fresh.
Yeah, 30's fast, man. 30's crazy, yeah.
But the same amount of effort that you're putting to analyze a slow pair, to put that same amount of effort into an index, and you're making more money. Like, a person can
That's
just
why I
make
think
more
that
money.
transition is easier.
Yeah, but a person can make more money just by just that, change of pair.
Yeah.
Same kind of analysis, same kind of effort, same kind of everything. It's just a different asset. That's
Yeah, especially on indices too, like the risk to reward opportunities on a day-to-day basis is incredible compared to any Forex pair.
Yeah.
They're non-comparable.
Yeah, like I think with indexes, like it pretty much tells you when you're wrong very easily. You know, like very quickly, and then at that point you can pretty much just write out a move, and the pip count is worth more.
Yeah. In Forex, it's like it'll range in a 20 pip range for 4 hours. And
Yeah. But even like
not even getting like
in
1 hour
futures,
out of it.
I've never ever dabbled in futures yet, but a lot of people that I know like that have been doing currencies, they're going to futures now.
Yeah.
I don't know why.
There's no spread.
See, I haven't even experienced that. You know what I'm saying? But eventually, I do want to dabble in it, but I'm not opposed to it. But you know, like when the time comes. So.
Yeah, no, because there's a lot of options traders as well switching to futures. I've been asking them as well the same reason, but yeah, it's just so interesting. I think it's so important, as you guys have highlighted, in terms of like being open to change, you know. And one thing that's very interesting about this roundtable and why we've done it in this way is that we have like the industry's changes and always changes over time, and you guys have been within the industry and sort of with the community for so long now, and you've probably seen these changes.
Yeah.
Well, we're kind of just coming up, if you will. And but we've been part of like the whole SMC ICT sort of crowd, and then they're very loud, as you can imagine.
Till this day, I don't know
The cult.
anything about those.
I know, it's good. It was good. But that's why it's interesting, because I know you get the comments there, like,
I
hey,
get the
why don't you
comments.
use these order blocks, or your risk to reward, or your stop loss size? And it's always interesting. Like, what are your thoughts when you trade the way you like to trade and have been trading, and have been doing it profitably? But then there's people always trying to tell you of this new style, or maybe you're doing this wrong. Let's take a break for a minute there, guys, because I want to tell you about the best trading tool on the market, TradeZeller. The reason why TradeZeller is the #1 trading tool that every trader needs is because you can do backtesting, automated journaling, trade replay, in-depth analytics, and so much more. And the greatest part about TradeZeller is that it's all automated. All you have to do is connect your MT4 and MT5. It will pull all your data onto the dashboard. You can add playbooks, you can just add notes, you can add images from your trades, and you can get the insights that is necessary for you to progress as a trader. Now, TradeZeller is for absolutely everyone. Whether you're a crypto trader, whether you're a Forex trader, whether you trade prop firms, it is for absolutely everyone. And that is why thousands of traders have signed up using my link here through the podcast. Make sure you use the code RIZ10 for 10% off your monthly subscription, or WOR for 20% off your yearly subscription. The link is in the description below. And let's get back to the episode.
So people have been trying to push ICT upon me for the past like 5 years. Just like
Same.
Yo, Q, man, like this, try this. This is better. But I'm like, yeah, but I'm doing great with how I'm trading, you know? So it's kind of like, you know, but personally, till this day, I haven't really seen much ICT people or SMC people that's making more kind of big profits that I make with their style. That's-
Yeah, I feel like a lot of
I've seen-
people have also tried pushing like the whole ICT agenda, if that's how you want to put it, onto me too. And I'll even have like people in my chat nowadays like, oh, there's an FVG here, and then we have this over here, and then a conch, and I'm like, bro, what the fuck are you talking about? bro?
I think they,
Like-
they complicate trading way more than it needs to be.
I feel like for me personally, it doesn't matter how you make money in the markets. It doesn't matter if you trade smart money concepts. I know people who trade trend lines and make an absolute killing, right? It's as long as you're profitable in the long run, and that system that you're trading has a positive expectancy in the long run. But to me, it's like, bro, I've had so many people trying to actually push ICT onto me and like to start learning ICT and smart money concepts, and I'm like, bro, I've been trying like this for the last few years. You really think that if I'm making money right now, I'm just gonna randomly switch up my strategy? And not just that, I feel like also when it comes to like a lot of the people who are in that space, right? I feel like people make it try and sound more complicated than what it really needs to be, because trading, when you talk to an average person who knows nothing about trading, it sounds like it's like this super complicated thing to really get into, but when you break it down, like it's really not. So you could push an agenda maybe a little bit easier when it sounds that complicated, because it makes sense.
Yeah, that's true.
Yeah, no, that's very true, man. And that's like, I think that the stigma that a lot of people put on it is like, cause exactly that, right? Cause it's like a marketing tool. Cause that's
Yeah.
really what it was. That's how like
100%.
it started. You know what I'm saying? Like the whole like, kind of, you know, conspiracy, like I know what you don't know, like that all stuff is
Yeah.
like all created to be a marketing tool. That's really
Yeah.
what it is. But at the end of the day too, like something I noticed a lot is like, a lot of the times like good setups are forming like for like an ICT trader. Well, they're also forming for 100 other types of traders.
Yeah,
You know what I'm saying?
100%.
So like I wholeheartedly agree, like whatever you're doing, if you're making money, like don't even, why would you even think about changing it? You know what I'm saying? It's just like, that's the last thing you do in trading. And once you
Yeah.
get something that works, you just refine it, you know?
But it's like, when does a person even like start doing SMC or ICT and then transition over to being like a technical trader? You know, like,
Yeah.
like when does that happen? You know,
I
like,
mean-
what has to be shown so they can even convert in some kind of way?
You mean like technical, like just like a different like style
different
of
style, like-
trading?
yeah, like a different style.
I don't know. I think a lot of people, they get stuck in it because like they've kind of like accepted the gospel of it. I don't know if I read a word of ICT. Like literally, that's how people look at it. That's like a cult, bro. But I think that they get lost in the
cult.
they get lost in the wrong thing. At the end of the day, man, like I know a lot of people. Like for example, I have students that are also a member of your community, and we trade completely different. But they're like, oh, like I've blended some of the stuff, and they've
Yeah,
come
me
up with their
too.
own strategy. You know what I mean?
Yeah.
So I think really what it comes down to is like, most of the people that are in any space of trading when they're learning aren't making money. So they kind of will learn, they'll either stick with that one until they learn, or they might end up strategy hopping and hopefully they find another one where they'll be profitable. So I think what makes people switch is just not working for them.
I think
over time.
that's probably like the most dangerous thing that you can do.
Oh, 100%.
Because like this person and this person, they all trade differently, but they're all profitable in some kind of way.
Yep.
You know what I'm saying? So at the same time, like trying to actually even combine styles and that kind of stuff is not going to work.
Yeah, no, I agree, man.
Just stick with a style and critique it over time to the point that it actually works.
Yeah, I made that mistake like for years. Just something wouldn't work for me for like, well, it would work for like 3 months, and then market conditions would change, and then it stopped working, and then I jumped a system, and then like it stunts your growth curve, like because once you start picking up momentum, then you're switching something, and then you're not really getting all the nuance that you should be getting, right? Because all those systems could have a ton of nuance that you're not going to get just in 3 months. And like I think it's interesting you brought it up, where I saw a lot of people tweeting and like defending ICT concepts. It's like, why are you looking at this? Like, this is what happened. This is a fair value gap. This is a break of structure. And you can kind of just tell those people have fixed mindsets over something. Like they can't comprehend like having an open mindset that somebody else has a different system that works in the markets that is not ICT, right? They're trying to like defend it like tooth and nail.
They could see you in profit and still tell you that you're incorrect.
Yeah.
It doesn't
Yeah,
make sense.
literally. Oh, he got lucky.
Yeah.
He got lucky. That's the only opposition I have against like probably some of those. I don't want to like generalize all of them, but it's like, bro, like you have this
It's a majority,
ego.
though.
Yeah, you have like this ego in the markets that you're trading the system. And you don't even have 100 grand of your own personal trading capital, nor do you really have the skin in the game to be like, yeah, your system sucks. You know what I'm saying? So for me, it's more like you have this huge ego inside of the markets where ego kills you.
Yeah,
So
it's the mental edge. They don't have the mental
what's
edge.
really going on here?
I think like I had like the same style that I trade now. Like I've been trading for the past like 9 years actually. Like 8 years, because the first year was market making method, right? Well, beyond that, it was just more just like trial and error, and then like fixing certain things in my style. It could be like the most smallest thing, like how I even apply a trend line and like, you know, the small things. But 8 years of critiquing got it to where it is now.
Yeah.
And I think that's what it is. Like if you stick with your style, then you'll eventually get to a point that it's profitable. You know,
People are like perpetually stuck in the trial and error phase, though.
that sucks.
You know
Yeah.
what I mean? Like they're just stuck there forever.
Yeah.
What,
nah.
but like, why do you think though?
I don't know. I just think they haven't figured out what works. Like they're probably not analyzing their data enough to say like, I took this trade. This is exactly what worked. It's like when they win, it almost feels like luck. Right? So
Yeah.
So like my theory behind that is probably because so like I've only traded demo like I think like about a couple weeks like when I first started, because I think it's you're not really getting the true feeling of trading if you're just on demo the entire time. So throughout like my entire like development of like my style and everything else, like I'm live the entire time. Even if it's like $100 account or $1,000 account, it's still live. So you're still getting emotion, and like you have like the urge to want to fix it, like want to actually, you know, understand like why it's not working and that kind of stuff, even like critique those small things and that kind of stuff. So I feel like it kind of forces you to grow, and that trial and error phase eventually kind of like just goes out the window, because you kind of like are forcing yourself to actually make money, and real money that you're actually using. You know what I'm saying?
yeah, and I think you probably noticed it too. Like when you're scaling up, like that same trade that you took that might have been $50. Like you could have made that same exact trade and now it's 5K.
100%.
You know what I mean? It's just the size is different.
Yeah.
It's like when you find something that works on the smallest amount of money, just try and scale that up as big as you can.
You gotta have balls though. I mean, if you're ready to
Yeah,
scale.
yeah. I mean, you could kind of like find a way to like grow them, you know, like because not everybody's like comfortable risking X amount. Because when I came into the game, I was only risking like $50, $100, you know, just like you. And then over time, like you get more and more comfortable. They're just numbers on the screen, right? It's a video game.
I think like when I thought about that concept, it's just numbers. It's literally just a game that you gotta try to be a part of as long as possible. That's when I kind of started seeing like the most amount of growth, because I've always wanted to play the game. I've always wanted to be in the game, stay in the game as long as possible. Because once you're in the game as long as possible, you get the most amount of experience compared to some people that they blow an account, then they take like 3 months off, and now you're 3 months behind.
You just reset yourself.
You know what I'm saying? In 3 months, so much movements could have been changed as far as like the market environments change each and every single season. You're 3 seasons behind now because you haven't experienced that slow season and that kind of stuff, and trying to actually understand how to analyze in a slow season, in a fast season.
Yeah, yeah. So when it comes back around, they don't have the experience.
Yeah,
because
exactly.
they missed out on the last time.
So I think it's just very important to kind of like just be a part of every single season. I personally have never taken a season off, probably like about 2 weeks off or even a month off. But to take a whole 3 months off, it makes
That's
no
crazy.
sense. It makes no sense.
That's crazy.
You're missing out on a lot of money, a lot of pips, hundreds of thousands of dollars that you could have made based on your lot size and that kind of stuff. But at the same time, try to stay in the game as long as possible.
Bro, even just like, not even the amount of money you could have missed out on, but just all of the experience you could have potentially gained. Imagine just going to the gym every single month, every single day, every single week, consistently for the next 6 months. Imagine like the compound of results that you've been able to get over those 6 months, and then you just stop for 3 months and try and come back. Of course, you're not going to see the same results.
The muscle memory, it's there, but it's not there. You know?
Yeah,
it's not as sharp.
You
like,
just reset
You
yourself
fall
for
out
no
of shape
reason.
like faster than
Super
easier
quick.
than
Super quick.
Yeah,
to get
because
into
like I've noticed that like whenever I'm on a roll, I can make 25 winning trades in a row, boom, 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 all wins. But then all of a sudden I have a loss, and I have to take a loss to actually get out of that rhythm and everything. You know what I'm saying? I have to lose. You know, so I think like going through that is just very important. So you can actually get those hits to kind of like know that, you know what, I'm real too. You know, so like you can have these back-to-back wins and everything, but I think like once you actually get in a rhythm of winning, it's kind of hard to stop winning because you kind of like understand where the market is, understand like where your targets are, like you're understanding like, you know, like all like the time frames and that kind of stuff. Like you're pretty much like in tune with like every single thing that's going on within the market at that point in time until you stop, and then you kind of like lose track of everything.
And you got to get slowly back into it.
Yeah, which takes
Yeah,
time.
you gotta get comfortable with losing because like if you just have a massive like deflating loss, like you're gonna want to take like a 3-month break, you know? Because there's people like Wall Street Bets. I don't know if you guys go on.
Oh, yeah,
it's
yeah,
like
bro,
crazy.
they're
Crazy. These people are just
they're
like betting their
degenerates,
life
bro.
savings, yeah, on like 0 DTE options.
I would say like that's gambling instead of that's gambling instead of trading.
What's the
I
name?
feel like there's a
Wall Street
fine.
Bets.
Wall Street Bet. Oh,
Yes, it's
It's
a
a
it's
game.
I think it's a
GameStop.
subreddit.
Yeah.
Yeah, but I think there's a fine line between what trading is and gambling. Wall Street Bets is just like full degen gambling. You might as well go to the casino.
But I feel like that's where kind of a lot of traders are at though, like because they see that you can make easy money from markets, like, but they're trying to like take that small account and not to say that you can't do it because people can do it obviously, but you
Yeah.
have to be comfortable with blowing that account possibly. Like a lot of people are just not comfortable with it.
So people might hate to hear this, but trading is a form of gambling in some kind of way. But it's a sophisticated, it's a sophisticated form of gambling with a theory behind it.
I agree,
you know?
I agree.
But in some kind of way, like it could easily be.
It's just the edge is in your favor.
Yeah,
The
yeah.
probabilities are in your favor. It's
No,
really all.
Yeah, I
it is.
think it's better than the casino, right?
It has the possibility to be in your favor. Some people that don't actually study enough and that kind of stuff, they are obviously on the opposite end. But at the same
Of
time, the
course.
people that actually put in that work enough, they understand the market and flow of the charts enough to even make it be in their favor in some kind of way.
Yeah.
It's the same thing with counting cards. The guy that knows how to count cards is not putting his whole bankroll on the next
On one
card. You know
hand,
what I
yeah,
mean?
no.
Like he's managing that bankroll. Like yeah, he's gonna size up on the next hand that comes out, but he's not like betting the farm on the next hand.
Yeah, no.
Yeah, no, totally. Just because your hand, the hand that you have is fantastic and the probability for you to win is super high, there's still that chance you could still lose. So you still have to manage your position
Yeah.
properly.
But and then they're like, I think I'm always open to losing. I always say that I'm not scared to see red. You know what I'm saying? I could be in drawdown for a couple of days, coming back, you know. But at the same time, like as long as like the risk and everything for that trade makes sense, then you know.
How is it for you then, like in terms of, you know, after trading for so long, what is it that keeps you motivated to keep trading? Because I'm sure like you could have stopped trading years ago and been absolutely fine.
I love the game, bro. I love the game, man. I love just being in the market, seeing like that's the only thing that kind of like gets like my heart racing at times. You know, like even like seeing like a big spike on like a red folder, all of a sudden like your heart is racing at like 170 instantly. You know, like not much can get your heart rate.
Trading FOMC.
Yeah, you know, like but.
No matter how much you
Yeah.
try and like limit that like mental like I guess blip, it's just so hard to do. Like everybody's like just detached from your emotions. Like it's extremely hard to do, especially when that red folder, you don't know what's gonna happen. You know, what I
Yeah,
mean? There's
no.
that uncertainty.
But it's fun though. Like it's not. It's
Your
fun.
platform freezes.
Yeah,
and you're just like,
it's
what the
exciting, and I think the fact that like you have the ability to, you know, change your entire life in that one trade at times. You know what I'm saying? Like it's possible. So like you know, just even having that optimism behind the entire form of trading, it makes you want to keep on going because, you know, you might be broke now, but that's not like you could make rent and everything within 2 trades. That kind of thing.
Yeah,
I
just-
think now
yeah.
you're seeing it too, like, because there's a lot more prop traders coming up in the space that are like able to create like a living for themselves out of like essentially nothing. The ROI
Yeah,
on a prop
yeah,
account
it's
is like,
huge.
crazy.
Yeah, because the thing with props alone, I think it gives people an opportunity because like you know there's people that pretty much have hard capital, but at the same time there's people that pretty much just can't really afford it. They still work that 9 to 5. That their money that they're getting each and every single month. That pretty much is rent. That's insurance. That's pretty much food. That's everything.
Like maxing out their retirement.
Yeah. So a prop just gives a person an opportunity to even be a part of the people that pretty much have that hard capital in some kind of way.
What's it like for you? Obviously, when you were coming up, props weren't even a thing.
Props weren't even a thing. FTMO, I knew about FTMO from 2015, but like how they were marketing, it didn't seem real. It didn't seem real because like it didn't make sense at all. Like, we'll fund you so and so, but it didn't make sense for people that pretty much was trading at the time because they thought it was all a scam. Come to find out, it's not. But it took so long for everybody else to catch on to know that props have a system that could actually work, so people can actually get that money that they actually dream of actually trading. But like back then it was me, like it was more just like if I blow an account, like I got to go back to work for like about 2 weeks or 3 weeks, save up again and try again. Yeah. I had sold like my car for like around $3,000, like my Volkswagen, $3K straight into the account. I lost the money in like about a week, but I was open to taking a risk though, and because I knew that on the other side of that risk was like that life-changing chance of making big money and everything.
Do you think there's benefits to building in that way?
That's what it is. Like, listen, I remember that, bro. Like, I sold a car for $3,000. I bought a car for $3,500. I sold it for $3,000 instantly in the account. Fuck that.
Is there benefits you think that some traders are missing out on from building your own account in that way?
100%. I think it builds more character. It builds more.
I agree.
Edge. Like you pretty much understand like the foundation a lot more than people that's trading like nowadays. Like I personally think like traders nowadays are kind of soft, because they don't really know like how to actually. They don't have the grit, compared to a person that pretty much had to actually grind for the money and then invest the money and then build the money and then build the money again. So it creates a different kind of trader. A person that's pretty much not open to failing just because they blew an account and that kind of stuff.
There's a big difference when you lose an 100K funded account and your own 100K account. Huge difference.
Like there's a lot of traders. We talk about it all the time. There's a lot of traders that are net profitable with prop, but like if you look at their drawdown, how many accounts they blew, like that's 10% drawdown that they blew every single time. You try to do that on a personal account, there's no reset. If you lose 50% of the account, there's no reset.
You gotta have to make 100%.
Yeah, I mean it's a different strategy for sure. Like the way people hit props, it's like.
But you try and like replicate that in a personal account. It's like,
no, you can't. It's not the same, right? It's not the same at all.
Different skill set.
But it's honestly,
I think it builds the emotional intelligence in trading that people don't really talk about too often, honestly, because like with your real money, you're more it's a bit more emotional, of course. Like like to lose 20K in one day, all of a sudden you're not going to sleep that night.
Yeah.
20K on a prop or like a demo account, you're going to sleep kind of like a baby,
You're just like buying another account.
So I think it just builds like that emotional callous, doing like a real account compared to like a demo account or like a prop account, that kind of stuff.
Yeah, 100% agree. Yeah, like props, it's like, I mean, I trade props. Like I'm actually going more into personal now because it's like, it's really not even, I mean, it's trading, but it's really not like exactly what you're saying. It's like, you don't respect that account. Like you're going in with one mentality, and that's to just run it up on that account. And it's not the same. And a lot of the people that, like, I can't imagine starting trading in this whole like prop era.
Yeah.
You know what I'm saying? I couldn't imagine that because like you start and now it's like ICT is the most popular thing, and everybody's just trading prop accounts. That'd be such a weird environment. You know what I'm saying? Honestly though, like that's this not, you're not building the right habits, and like in trading, like you have to build that foundation. If you really want to scale to like what people want in trading, like to make big money, you have to scale not only like your bread, but like the way you deal with money, the way that the way you handle losses, the way everything that doesn't come with trading a prop account.
No.
But I think we're going to see a lot of people transition from props to personal. Or even,
I think so too.
I think it's kind of like when a person start trading like yesterday, and all of a sudden they're just on straight signals 24/7. Like they're creating a bad foundation immediately. Because imagine doing signals and doing a prop at the same time. Like,
dude, I see it all the time. Yeah.
You're just like, you're
clapped.
You're clapped eventually, because you're not developing like that.
What happens if
that true foundation
gets shut down, right? If prop gets shut down or the signal service
now
you're just like
you're screwed. But also like you're becoming dependent on somebody else.
Yeah, the market's gonna take that money back. The market always takes back money that you didn't deserve. Like you can get it from the market, but if you stay around long enough, like let's say you get real lucky on something you really don't know what you're doing, like where you made it off signals and then you try to take like that money and go trade on your own, you're not gonna be.
That money's gone.
It's gone. Yeah, it's going back. Like it'll take it. The market always takes it back. Always. You know
and
what
I feel like also the problem with people who are just getting into trading now, who are starting to get into the prop space like right away, is like their ultimate goal is I just want that payout. You know what I mean? Versus for me, when I started trading, it's like, okay, I want to make money consistently as much as I possibly can. And how can I scale the money that I am trading, that I am making consistently out of the markets, versus now a lot of prop people are, I just want that one payout. I just want that one big payout. It's like, well, that's your master plan.
Yeah, that's why you're working backwards
You know
from.
what I'm
And
saying?
But
it's
remember,
just-
like I've seen people have payouts of like big money, like 20K, 40K, 80K, like life changing money. So at the same time, I can't really blame them. But I think the only thing that really matters is that like what do they plan on doing after?
Yeah, exactly.
Because
Yeah.
so for me, I think the smartest thing like when it comes to a prop account is like, okay, make your money on your prop and then start your live account, or start to reinvest in education to actually understand like how to actually really trade.
Yeah, no, that's what I tell people all the time is, bro, once you do start pulling money out of props, bro, you have to put at least a portion of that into your own personal account. If you want, you can continue to milk all the props as much as possible, but a big portion of the profits that you do pull out of the props should go reinvested right into your own personal account.
Because imagine if like the route that props are going down and everything else, all of a sudden in like 2 years, prop is not even like a thing anymore.
Yeah,
like
yeah.
nowhere. If you're in the US, you
Yeah,
know?
yeah.
So now those people that pretty much were so dependent on props, now all of a sudden that money's spent.
They don't have the skill set.
They don't have the skill set.
Yeah.
Nothing.
all that time.
There's like no foundation there,
Yep.
which sucks now because now they're kind of screwed because like that kind of lifestyle that they wanted to actually live and that kind of thing is now just they can't really imagine
Yeah.
like what to even do now because they have no education, no prop, no kind of signals. Like all these things are slowly failing, So I think it's very, very important to kind of like, get the foundation, like
And then they
get
have, like,
education.
false expectations of what they want out of
Yeah,
life, too.
take your time to actually learn every single thing that might take time, years and that kind of stuff. But some people just don't want to go the long route.
Yeah, no,
They
for
want
sure.
the money tomorrow.
And that's why most people start trading though too. I feel like they look at it like it's easy, like, oh, I'm just gonna learn this skill. Like I was on a call with a member of my team the other day. He doesn't trade, right? Like
Yeah.
he was just you were on the call too. He was like, I just want to like learn enough to where I just know what the market's gonna do. Like that way I just
to
know.
get in, where to get out.
And he was like, yeah, if you figure that out, let me know. You know
So-
what I mean? But
so-
people get in, that's their expectation is that it's just gonna be like, oh, I'm gonna learn this. Then I just know trading. And I'll just
Yeah.
come in and I'll make money. It's like, dude,
And I know what the market
Yeah.
is going to do and where the
Yeah.
market is going to go.
yeah, it's like, man,
Those people are always new. As far as like the person that just started learning about trading 2 weeks ago, they make a couple good trades. All of a sudden, I got it.
Yeah.
Yeah.
Because I think the person that's pretty much brand new, they think the least, which is the best.
That
makes
beginner's
sense.
luck, yeah.
Because over time, like we become so wrapped in trying to just learn, and to the point that we learn too much, to the point that we overthink.
Yeah.
But a person that's pretty much just starting, they don't know how to think. So at the same time, they just pretty much go off of like this, like the more simplistic way of trading. Like, oh, it's going up, cool, buy. It's going down, all right, sell. And they make money in some kind of way. Does it last? Not at all. But at the same time, they get an itch to even like want to trade more. Then eventually come to a point that they kind of understand that it takes education to stay in the game. So you can make money in the game for like a week or so, whatever. But can you stay in the game?
Yeah.
I doubt it.
Yeah, no, that was me, bro. When I started, because I remember I literally like learned fib retracements. No shit, I would just do like 618 retracements. Pretty much, like there was a little more to it. Just like either buying or selling, like with like a 15-minute or 1 hour, and I would actually like make decent money, right?
Yeah.
But I was like no risk management. I'm like throwing 5% of the account on a trade. That did, but I made good money. I was like, oh, okay.
Yeah.
Like we're here now. You know what I mean? And then they quickly was humbled and realized like, oh, there's so much more to
But
this.
it's kind of interesting to kind of go back to that now.
Yeah,
Like, you
yeah,
could
yeah.
go back to just using the Fibonacci retracements if you really want
Yeah.
to.
Yeah.
You know what's funny? There's times that I get into like a little rut every now and again, and I have to go back to like even like my Confluence 1.0 video, like my first Confluence video that I've ever made back in 2015, and like it's simple concepts, but at the same time, like those simple concepts at times it creates those good habits also.
Yeah, simplicity is key.
Every now and again, like you got to kind of like go back in those more simplistic type of videos to kind of like get readjusted and everything to like what's currently going on. So
Yeah.
like it's like you're not overthinking every single thing because you know so much.
At the end of the day,
nowadays,
bro, the market's going up or it's going down. Like
Yeah,
or sideways,
it's-
sideways, and just
You know
being
what I
patient.
mean?
Yeah.
It's just what happens in between your execution and when the trade either hits target or you get stopped out.
Yeah.
That's where most people mess up.
But also being open to going sideways for a couple of days.
Yeah.
Yeah.
For like a week or so, because
Well, I think it's interesting what you said though in terms of getting into a rut. And is that your sort of procedure then? When you get in a rut, just kind of simplify, go
You
back?
have to, bro, because there's times that like I have like my workflow, and there's certain times that like I'm missing two things out of that workflow that messes up everything, you know? So going back to like the more simple stuff, I kind of like fix what's missing in that workflow.
Definitely.
So every now and again.
Yeah.
Every
How
now
about
and again.
yourself, bro? What happens when you get into one of those trading ruts?
It really depends on the amount of money that I've lost over the span of that potential losing streak. And it really,
Had to be like a big loss. Yeah, true.
yeah, it really just depends on the amount of money that I lost. If it's like normal losses, that it's like, okay, well, you know, I'm just gonna keep trading through it. Like I trust my system, I trust my strategy. But honestly, it also comes down to me looking back at the results and really analyzing, okay, well, am I over trading? Am I overcomplicating things? Because that's another point that I was actually going to add on. Like some of my best trades, my biggest trades too, in terms of not just our multiple, but from a monetary perspective, have been the simplest trades. And my shittiest trades have been the ones where I try and really overcomplicate it, and I really try and combine as many things as I possibly can, and just really overanalyzing price action have always been my worst trades, which is quite interesting to see. But for me to really get out of one of those like ruts or losing streak, it really just ultimately depends on going back and analyzing the last few trades that I've taken and just going over what I'm essentially doing wrong, if I'm doing anything wrong, and if I am doing something wrong, say, okay, let's cut it right away. Or if not, it's like, all right, well, I'm going to keep pushing through. I have no other option, you know?
Yeah, that's fair.
I think for me, it's like the trading frequency or just like taking a break. And again, if it's a deflating loss, like take like a couple of days off, you know, even going into the weekend, if you take, let's say if you take a huge loss on Wednesday, take Thursday, Friday off, and then you have at least some time to reset before the next week. But yeah, it's kind of getting back to the basics. Like you have to have a checklist that you're checking off every time you're sitting down in the market. I find like my biggest drawdown periods is like when I'm missing parts of that checklist. Like if I'm not doing the analysis, or if I'm mismanaging my trades, like as far as position sizing or moving my stops, like widening my stops at times, or tightening them too much, or scaling in too much, or scaling out too fast. It's like just kind of go back to basics where you're not managing the trade so much.
Yeah.
Like just entry, just set and forget.
Yeah, I might just want to add in also. I think this also, like, I'm not sure if y'all do this also, but I like to keep like my charts kind of messy at times because, you know, like it looks good, but at the same time, like I think if my charts are too messy, I tend to like lose track at times. So having a loss, I got to clear off my entire chart. I have to, because that way I think I could reanalyze, reset everything, like change, like not even change my bias, but make sure that my bias is as it should be. Because if it's too messy, I have one set bias the entire time. I have one TP in mind, only that TP. I see nothing else. And it might never ever even get there until I clear it off and I'm like, oh, what the fuck? It was in the other direction the entire time, you know? But I think it takes actually clearing off your entire chart every now and again to kind of like, you know, get that little reset to kind of like to make sure that your bias is as it should be, because it could easily get conflicted and everything based on how messy your chart is and everything.
I actually do it like at the start of every week, so I'll clear off my chart entirely and just start from scratch.
Yeah.
I do. I hit that trash can button on TradingView all the time, bro. I hit that like every day. Now,
After every loss, it's like...
No. I don't have much on the screen, bro. Like, to be honest, but my strategy is super simple. But really, like the way, like, so if I go into a drawdown, I just cut risk. Like, so my risk management, like, let's say if I go anywhere below like my starting balance for a set period of time, like for the month, right? Say, then I'll cut my risk in half, right? So that, you know, if I start going on a losing streak, it's really not gonna do too much, you know. Usually what I'll always do is just kind of review and be like, kind of like what you said, is this like normal losses or are you being an idiot, right?
Yeah.
Most of the time, like if I go on a losing streak, I'll be able to find something where if it's enough to where I'm like analyzing it, I can almost always go back and be like, okay.
Yeah.
What are you doing, bro?
I feel
know
like that's what people don't do, though. I feel like people
nobody
don't
does that,
look
really.
at, like, to me, there's a big difference between going back onto whatever trading platform you're on and looking at your trades and saying, okay, yeah, I lost this many trades, I lost that many trades, I've won this many trades, and actually having a structured journal. Because for me nowadays, especially too, like for me to be able to analyze all the trades that I'm taking, I need to see not just screenshots, but especially with like TradeZilla, it's so helpful nowadays because there's an interactive chart. Like I need to go back into that and see, okay, is this normal or am I doing something that is causing these losses on purpose? That's what a lot of people don't do. Just like a regular business would have its business structure and a business plan, I feel like that's what a lot of people neglect when it comes to trading, because they just think, all right, cool, I just got to come in, press buy, sell. I could see all my trade history here. Like I don't have to keep track of anything. And for me, that's what really took me to like that next level of seeing like those big trading days and really understanding what market conditions I want to start sizing in on and what market conditions I want to start taking money off of the table too, you know? So that was a big portion of that for me too. I feel like that's why a lot of people, going back to you, I think it was, I don't know, I think it was his question. Was your question when he was talking about why do you think like a lot of those people can't get past that, like that critiquing area? I feel like that's a big portion that's missing for them. I wouldn't even say journaling. I would say more just keeping track of your own statistics and understanding why you're taking these trades. That's why.
Yeah, accountability is real because
I
it's
think
like
I'm one of those people.
Yeah.
Because I don't keep track of like my trades like in a journal, but at the same time like I'm working towards that because I think there's certain times like when I'm in that like that rut and everything else, I don't understand why. You know, so trying to actually just be a bit
Makes it
more
easier.
organized. Yeah, exactly. Right, but trying to actually just get
A big win and they broke all the rules and then be like, that was a good trade.
Yeah.
I also feel like a lot of people can't put the accountability on themselves too. It's easier to say, you know what, I'm in a losing streak now. It's because Jerome Powell. You know what? He wore the wrong fucking tie today. That's why I'm losing, bro. You know what? The economy's doing shit, or you know what? The strategy that I learned just doesn't work. Instead, they should be pointing the finger at themselves. Like, okay, where am I fucking up on? You know, especially in trading, like you have to be open with yourself to be able to improve that way, because a lot of people don't have that accountability in themselves. Just like if you'd work at any Fortune 500 company, bro, if you're fucking up and you're costing this company tens of thousands of dollars, you're gonna get fired quick. But in trading, like it doesn't really work that way.
Yeah, because like my more organized way of trying to actually get organized is just like every single time that I have like a nice profitable day, immediate withdrawal. Like I don't even wait anymore.
I agree with you.
Because I think even like building an account is at times overrated as well. Because like there's times that you'll build an account and then all of a sudden it drops back down to like an area that's kind of like not really break even, but at the same time a bit uncomfortable. That you kind of like just gave all that money away that you just made.
Yeah, and it's more detrimental when you do take like those big losses too. And I feel like a lot of people are just too married on the idea of like, all right, I want to turn like $1 million to $5 million versus, bro, if you call it 10 grand into an account and you could withdraw consistently, bro, by the end of the P&L, you would have turned those 10 grand into 100 grand. You may only have 20 grand in the account, but you've withdrawn $70,000 along the way.
Now it just costs money, right?
You know what I'm saying?
Yeah.
But you still gotta pay taxes on it.
But at the same time, I think this is very, very important to kind of like just like, you know, pay yourself very, very often, because like there's times that you might get into the habit of just trying to just build it to $1 million. You know, like that $1 million mark is always everyone's first ideal number. You know? I want to build it to $1 million, 100,000 to $1 million. Like you can withdraw 1,000 times and everything else, but eventually withdraw up to $1 million. You know, but not make it feel like that all has to be at risk in the account 24/7. It doesn't make sense.
For me,
Forex brokers, they don't even insure your money. So.
And for me, when I don't withdraw and I find myself like going through these huge winning streaks and I notice I haven't taken one single withdrawal, I lose like full respect of all of the money that's in the account. So I wouldn't mind taking like these huge risks in the market versus like after I do take that $50,000-$60,000 loss, I'm like, bro, what the fuck am I doing?
I could have went on vacation.
Yeah, bro, I could have
done this. I could have paid that.
Could have done that. I could have bought this watch.
It's like, okay, I made $50K. Like,
if you deposit 50 grand in your account, now you see $250,000. You're like, all right, I want to keep going. Let me take a $25,000-$30,000 risk now versus like, all right, you know what? Let me just chill. Let me withdraw. I like actually paying yourself along the way. Like weekly withdrawals to me now is like super crucial because I can hold myself accountable to making sure like I don't lose respect for the money I do have inside of my trading account, so I don't come to a point in a situation where I'm willing to risk like half of that account on just a few positions. You know,
I think that's one of the benefits though of trading personal capital, because obviously 100%. With the firms you're told when you can withdraw versus obviously being able to choose when you withdraw. But that kind of leads on to another question though, in terms of fixed risk or dynamic risk, because I know there's always the debate of people like just risk 1% versus those who sort of just have open. And it was very interesting. For ages, I used to think you can only be profitable if you really do a fixed risk. I really did. And then thankfully through the podcast, I've been speaking to so many traders, and some of the best traders really have had their best profitable trades because they know when to size up on those trades that they
take size off.
Yeah, like I have a big thing that I always say, like a person that's open to only risking 1%, they don't want to make money.
I feel
Simple
like
as that.
For me, I feel like it's very situational. It's what are your goals? Because if you're going to tell me, all right, you know what, I want to be managing a $10 million portfolio, for me, I don't feel like you need to risk more than 1 or 2%. But then again, like if you're just trading your own personal capital, why not actually go dynamic with the risk and size in on those trades that could give you that huge R multiple? If you're going to tell me I'm going to risk 50 grand on a trade to potentially make 5, 6, 700K, I'm going to do it.
That makes sense.
That makes sense. That makes all the sense. But if you have, you know, a huge trading account, there's no real need because 1% is $20, $30, $40,000. You know, so I feel like it's very situational. But at the same time, like if you're trying to make money in the markets and you're not somebody who can just go ahead and do that, then it kind of makes no sense. And at the same time, you do want to be sizing in, and you want to be sizing in heavy on those opportunities that are going to give you that big R multiple. You know, and you look at a lot of these traders, and it's like they know when to size in at the right times, and they know when to take size off of the table, and that's where the real money comes. It's not really always just like one fixed risk versus like on prop firms. Like, I mean, you're kind of fucked, especially when you just start the funded account.
Yeah, but that's the thing though. Like with props, you have no choice.
Yeah.
Like you have no control over anything. Like it's not your money. You know, that's why it's very important to like make your money on the prop and then do your own thing. Also, because at the same time, like that's when you could actually showcase your true skill at that point. That's not so based on like the parameters and that kind of stuff. So like you could really see how good you are with your own money and everything else because you could pretty much like fluctuate with the risk and all these other things, the assets, like times a day, like holding it over the weekend, like you can pretty much do all that. With a prop account, you are caged in.
Yep.
But it's not your money.
Yeah.
So
and would you
it makes
pay
sense.
$2,000 for
Yeah.
300K, 400K nowadays?
It's not your money.
It's just a tool,
It's not your
man.
money.
It's just a tool.
If it's your money, you can go as crazy as you want to. That's what it is. Like that, trading has that kind of ability with the leverage and everything. That
I also
we're
feel like it's more rewarding when you do hit that withdraw button and you do make more money than you invested in your trading account with your own personal capital than with the prop. Because again, like, bro, it's pixie dust. Is really what it is, bro. You know, you put $600 and you got a $100,000 account. It's way more rewarding for me, in my opinion, when you could withdraw at any point in time. Like I remember there was one day where it was my boy's birthday and I had made like $130,000 on some US 30 shorts. Bro, I withdrew $30,000 and went and bought him a watch. You can't do that on a prop
True,
account.
yeah.
You can't.
It's true.
Yeah, no.
You might have to wait like about like a week or so.
And that's if they want to pay it to you.
Yeah.
That's if they want to pay
I
it to you.
totally agree when it comes to like sizing in. I think it comes down to experience too, because a lot of people they don't have the screen time and they haven't traded that setup enough to know like what's the A+ setup to size in. So it seems like they're always sizing in on every trade. Like this trade looks like it's gonna go.
Nah.
I'm sizing in on this one.
Yeah.
And the way I size in is not like opening myself to more risk. Like I'll start out. Let's say if I want to like really size into a trade, I'll try and make that initial entry like at least adjust my stop to take some of the open risk off before I size in.
Yeah.
And then if the trade is really moving in your favor, it's allowing you more and more opportunities to size in without opening yourself up to more risk.
Yeah, because
Those are the
you're already
trades
You have
that-
the equity.
You already have the
Yeah,
equity,
yeah,
exactly.
You have
Exactly.
the positive
Trades
equity.
that are huge risk reward, and those
Oh,
are the ones
yeah.
that, like come with experience. So I always recommend, in my opinion, the way I was trading prop was everybody knows like I was doing a 0.25% risk, but across like 20 different accounts, right? So like I would start at a 0.25% and add a 0.25%, but at the same time I was adjusting my stops, and then before you know it, it's a six-figure trade.
That's crazy.
But it's like it's really the capital that's doing all the work. It doesn't have anything to do with like how much risk I'm putting on, right?
Especially not on your very first entry, your very first position.
That's more.
Your
Yeah.
first position is like a feeler, because if
Yep.
it goes against you straight away and you're on you got 5% risk on, like what do you do now? Like,
Yeah,
you have
yeah. You're
have
clapped.
no
You know, like
ability to maneuver
those kind
in
of
that
trades,
market.
I've always loved though. As far as like doing like a 0.01 on 30. You know, just do your thing.
Yeah. Just to
You know
see
what I'm
what's
saying?
going on.
And then you kind of like put your true lots and, and that kind of stuff on it. So like I think the teaser, right?
Yeah, just
What is it called?
a feeler. Yeah.
Oh, like a fueler is like probably like one of the most important things because it makes you like not have the urge to like want to put like a big lot size immediately because that trade might go
Yeah,
wrong.
those trades
and that
you
might be
put
like
on
unnecessary
As soon as
loss.
you put it on and all of a sudden it's red, those are the worst trades ever. 'cause
What do you
it's
guys
drawdown.
what do you guys feel about the people who, let's say they do take a trade and the trade's halfway to their stop loss and they add?
Yeah.
What do you guys feel about that?
Yeah.
That's
So
the worst.
never add to a loser. Never add to a loser. Like that pretty much is like pouring gas on the fire at that point. You know.
It's
Yeah.
crazy, isn't it?
It gets messy.
Yeah.
It gets messy. So at the same
forms
time,
bad habits too, though. That's the worst
100%.
thing. Like I always
Yeah.
say,
Buying
like,
your stops, you're like, oh, this one's gonna work. You
well,
know?
when people do shit like that, they're basically telling themselves like, I don't take this seriously. Like whether they
100%.
lie to themselves and tell them, oh, this is just, but you're basically affirming like that you're not going to treat this like a real business, right? It's like you were saying, like most people don't want to like, reflect or journal. And it's not to say like maybe that's required, but at the end of the day, whenever you get that persona of somebody who just like
Gamble.
doesn't really,
Yeah.
treat it seriously, you're not going to make serious money off. I mean, you might, there are outliers and stuff, but it's like, the bad habits and the tilt you go on, in my opinion, are worse than like, oh, that trade. Like, how much money you lose in this trade? Well, you can
You
get
look
that
at it as
back.
a singular trade.
But
instead
those
of
people that-
sample
yeah,
size.
Business,
Tho-
like, when
those
you're
people that co-
hemorrhaging in one area, you're not going to keep adding into it. Like you're adding,
Yeah.
fuel to the fire.
Yeah, I'm saying those people that actually come out of that crazy trade with a win, I think that money that they just won doesn't even last either.
It's a
Honestly.
Yeah, the
dopamine
market
hit.
takes
You know?
it back. Yeah,
Yeah,
it has
like
a
they
way-
all give it back to the
all it
market
is. It's
within
just
like a week or so.
it's an injection of dopamine. Is
Yeah.
what it is.
It's
Yeah.
rewarding bad behavior.
Oh yeah.
Yeah,
Yeah, no,
I've seen
for
it
sure.
many times over the
Yeah, me
years.
too.
Actually, like it's it looks good, but it never lasts though.
Yeah, no.
It never lasts because
The idea of it is better than what it actually is.
yeah.
That's what I went through. Like that's literally because like when I started, I just put a bunch of money into crypto, and then like a bunch to me at that time, and it like multiplied, and I was like, oh, okay, and it made me not care because I never withdrew any of it, bro. Like I mean, I would pull out some money to like
Yeah,
pay
like
for like living
small stuff,
expenses, but like you guys were saying, I was like, oh, I'm gonna flip this to a mill, right? That was like what was in my
mill,
head
yeah,
was a
the
mill,
mill.
and I slowly but surely round tripped almost all of it.
You heard about
You know
the
what I mean?
story of the Dogecoin guy? Who
Yeah,
had-
he had like some crazy
yeah,
amount.
Yeah, he had emptied credit cards. I think sold some shit, invested like
No,
300K.
it was a mortgage. He
Was-
he took
even
out a
worse than I
mortgage.
thought.
He
Even
took out a
worse than I
mortgage and then
thought.
he lost everything.
Yeah,
God,
I think his Dogecoin turned into like 2 or 3 million, and he still hasn't closed to this day.
I think like the one of the owner or like the founders or something of Dogecoin went through like something similar. Like he something crazy like that. Not like like it was something crazy. Not like he went on a mortgage, but he round tripped all of it.
That's
I don't
wild.
that I don't understand. I wouldn't.
Television on their profit target, right? Like
Yeah.
they think it's going to go to a certain level, and they just completely just disregard any type of risk management.
No, but there's times that it actually does get crazy, but they just want to keep on going and keep on going and keep on going because I think they just don't have enough investing experience to even understand that it might not keep on going, and then just
But it has
press
some type of
yeah.
invalidation, right? Like where
Yeah.
your idea is no longer valid.
No,
I think a
they
lot of
lose
it's
track
like
money.
relationship with money too, because some people like one person's gonna get way more excited or way more hurt over losing X amount of money than they really should at that time. Like they don't realize like, okay, this isn't the home run, like the last trade I'm ever gonna take. You know what I mean? Like a lot of people, they get those first big wins, or when they start sizing up, they start getting like that greed almost. Like they start seeing big numbers, they're like, oh, okay, this is gonna keep going, and then wipe it all out. Like that's something I've seen a lot of people do too.
Yeah.
That's something I've done as well
Yeah,
whenever I was
yeah,
starting.
yeah, definitely.
But
Off the back of that same concept, though, like people adding to their losers. There's also people who just enter the markets without confirmation. For example, are you guys in terms of your strategies that we're looking to enter? Is that what you're looking to do? Are you looking to see some form of confirmation in the market before you enter, or are you just entering while it's just coming towards a level?
So there's times that the fear of missing out, like those trades, definitely just go in, and instant regret on those trades, right? Because you kind of enter the market knowing like, you know what, this is gonna be a loss, and like you kind of already know, But there's times that you enter your office nice and easy, calm and collected. You analyze first and that kind of stuff, and then you wait for these confirmations. That's when you have like the most amount of confidence and everything else to actually trade good for that day, But at the same time, like I think nowadays I try to actually wait even a day and everything else. Plus, forward markets actually get to a certain zone, and then I start to trade, not just I get on and then a couple lines. No, I wait it out and then wait until it gets like certain price and that kind of stuff, and then I start to trade.
Yeah, no, I
Yeah.
would never start taking positions on if I don't see my setup.
Yeah.
If my setup hasn't informed yet. I know there's people that take the trades like anticipating, okay, if price is coming up to this level, we're gonna see a bounce off of this level, but that's the problem. They said we're going to.
Yeah.
You never know.
It's never guaranteed.
It's still a probability. So I'd rather see the confirmation first that we've gotten some form of a rejection, there's some form of buying pressure, some form of selling pressure in this area, and then I'll get in.
Yeah, there's some people that just don't wait for candle closes.
Just jump the gun.
The candle just it pushes down first.
Yeah.
It's not even closed, and then it get in, and then all of a sudden,
that was a huge thing I had to learn was like the candle close is
Candle
like
close.
the only thing that matters. Because like even in the last 10 minutes, that candle could flip,
Candle
and then
close.
all of a sudden you're like,
Yeah, because
"Fuck."
that's the data solidifying itself.
correct.
Yeah, no, 100%. And that's like that's even a big part of ICT too. Like is like using candle wicks and closures. Like is trying to not have that happen. Like have the inverse of that. Like buy on that wick that people are trying to sell on because they think it's going to be a breakout. But yeah, in terms of like people that just like I see it too. Like because I go through everybody's strategy. Like I actually will review my students like journals and stuff. And sometimes seeing the stuff that people do is insane. Like literally they'll be like, okay, well here is the target. Price was moving in that direction. So, I entered a trade. And I thought this, you know what I mean? There's just like no system to it.
Yeah.
But I think like some kind of confirmation, because it's like, I feel like, whether it's like ICT, price action trading, whatever you're using, there's like the idea and like your zone, and then there's the confirmation, like the trigger, right?
Yeah.
Like, you know what I mean?
Correct.
And
100%.
I think every good strategy has that, like kind of that two piece, you know what I mean,
Yeah. Yep.
structure to it.
Like it's hard to sell a market that's going up, but you have to know when to sell the market. Like if it's just
Because
blasting.
Timing is also everything in trading too. It's not just about like what, because you could be right on the direction, but if you're wrong on the timing, you're gonna lose money.
I mean, to sell the market while it's going up at times, like if you think about it, like you're one person going against an entire army. You know, it's kind of crazy. You know, so
People
I think
love reversals,
because
man.
no, but people are just trying to anticipate something that's not there.
Yep.
You know what I'm saying? Like they want it to be there, but at the same time, like they might have to wait like another.
Especially the futures market
Like,
too.
you gotta turn around a little bit. You know what I mean?
Yeah, but
Futures
even
especially.
that, now it's better to like wait for confirmation on like a bigger time from like H4 or daily and that kind of stuff before you say, you know what, it's valid. Because if it's trying to turn around on the 5 or like the 15, it's not really enough data to even like say that it's ready to even turn around yet, you know? But some people actually get
just close.
yeah, and then all of a sudden shoot.
Yeah, people try to
Right back
confirm
up.
a daily level with like a 5-minute chart. It's like you're
Yeah,
skipping
no,
a
you
lot
can't
there,
compare.
but you know
You
what I
can't
mean?
compare.
It looks
Yeah.
tempting, but it's not worth it.
Looking at the bid ask line and figuring out like, all right, if I enter the position, what's my entry going to look like? Then
Yeah.
like when it comes to FOMO, like when that market is just plummeting and you want to enter position, it's like, well, that entry actually looks terrible when you go back and look at it. You're like,
Yeah.
why am I in this trade right now?
Yeah, because like even like at one point like you know, I think it was the market maker method that there was like 3 pushes and then drop. Listen, like when people were so stuck on like that theory, I've seen people enter the market on that 3rd push. All of a sudden, it's gonna push for like another 2 months.
Yeah.
you know, because they were so like yo, it has to go down. It doesn't really have to do anything actually. You know.
Yeah.
When you
And
start
then-
imposing rule on the markets, you're gonna get very humbled.
And
very
even when
quick.
you do everything right, you still can get wrong all the time. You know
Yeah,
what I mean?
yeah,
Like that's the
yeah.
thing
Yeah,
too.
yeah,
Even
yeah.
with confirmation, like
And that's where people start strategy hopping too, because they're like, bro, this shit doesn't work.
doesn't work, yeah.
You could wait for every single confirmation you have written out on your checklist, and there's gonna be times where it still doesn't work.
you could lose a whole week doing that.
And I think people
You know
have
what I
the
mean?
problem accepting that.
can remain irrational longer than you can remain solvent.
100%.
Yeah, that's for
and
damn
do you have enough money
Yeah.
left in your account when it's ready? You know, that's the thing.
You just gotta survive those losing streaks. Is
Yeah.
really what it comes down to at the end of the day. Making sure your wins are way bigger than what your losses actually are, and make sure your losses don't spin out of control.
Yeah, no, cutting risk and drawdown for me is like huge. I started doing that actually. I can't remember who originally told me to do that, but like and it's not even just like starting account balance. It's like whatever I started that month with. You know what I mean? And that's helped me like avoid so many loser streaks. Like where like I went on like last August I went on a loser streak, but I lost like 12 trades in a row, right? But it really didn't hurt that bad. Like it hurt more just like mentally. Like you know what I mean? Like it wasn't even really the money at that point. It was just like not wanting to be wrong.
It was small trades or something, or
Yeah, no, I mean the money hurt, you know what I'm saying? Like, but that wasn't the worst part of it, so to speak. It was more like, damn, like that's the worst losing streak I've been on. But since I was cutting my risk, it really wasn't that big of a deal. Like, you know what I mean? Like, I mean, it still sucked, but you
People
know,
get frustrated on like that 3rd or 4th loss and then size up. You know what I mean?
Yeah.
And then their equity curve just steepens and it gets sharper on the decline. It's like, if you're on a losing streak, you're just gonna hit a base hit. You know what I mean?
yeah, and I go back to this like low R, but then after that, literally, like I kind of got back in the flow of it and I had my best month after that. So it was just like, you know, but I think that the reason I was able to do that is I kept my mind right. Like I wasn't like, you know what I mean? If I would have had a huge financial loss, I would have just, damn, like, you know, you just erase so much. But if it's not, you know, nothing that you can't come back from.
How often have you guys seen that, like in your journeys, where you've had like a bad losing streak, but then actually had one of the best ones, you know, best winning ones afterwards?
Pretty often.
yeah, I
Or
mean,
vice
always,
versa.
yeah, it's
it definitely
always
happens
goes like
actually.
that, yeah.
I think like probably like my most delusional moment. I'm pretty sure you guys had this at one point in time also. Like my most delusional moment was probably back in 2015. I'm on the couch, right? I know my credit card number by heart. That's dangerous.
It was a start.
Yeah, right. And then so like I had like a 3K account, right? And then pretty much actually $1,000 account. I was trading and that kind of stuff. I took a huge hit. I blew the account in like about, I think, a couple of days and everything, right? That's like that time period where I'm on the couch for days and days and days studying that kind of stuff, right? All of a sudden that account is blown. I log back onto the account. I load up another $1,000, right? My bank holds it. I call the bank real quick. I do everything. Deposit. All of a sudden, deposit again, blown again. I do that about like 3-4 times actually before I have to sit back like, hold on, wait, what the fuck am I doing right now?
You're taking control of, bro.
Yo, like,
it does that, bro.
It was like
obsessed.
I was delusional. Like
Yeah.
I didn't know what was going on, but like it took me to like lose that much money at that short amount of time to even think like, yo, like like this can get crazy real quick, actually, you know?
Yeah, man.
But like,
no respect for the risk, right?
none.
Like, and you probably
none.
know just
Yeah.
from being like in the prop space. I mean, there's people that have lost like 100 accounts before they even passed.
Yeah,
one.
yeah,
To me, that's crazy.
Yeah.
You blow
So-
challenge after challenge after challenge after challenge after
Yeah.
challenge. You get one payout and just completely ignore all the mistakes you did.
You have to know like when you're going too far in, and then like take that step back and reanalyze everything, and then try to go back in eventually.
I always tell people like I'm like, would you feel comfortable like explaining what you're doing to like your partner, like your girl or something? That's what I always tell people, because I'm like, would you honestly though?
They're
you
not
know what I mean?
involved.
People are like, no, of course not. But I'm saying like, like if you're like, oh, like yeah, I just how's trading been going? Oh, well, I actually just blew like 15 prop accounts. I'm still doing like then when you say it like that, it sounds crazy. Not for that reason, but like in the sense that like.
Shit, babe, I think I might get a second mortgage. Just put it in the
Yeah,
trade.
you know what I'm saying? Like
That's
saying
a
it out loud,
problem.
saying it out loud to like it
Putting
could
the
be your
house up for
parents
sale.
or it could be your homie, whatever it is. You know what I'm saying? Like just another person.
Yeah.
Like just verbalizing it. How does that sound? If it sounds like crazy, like okay, maybe you should reconsider what the
Yeah.
hell you're doing.
Yeah, 100%.
Like
I can agree with that.
Yeah, because like when and every time I say it, there's like. Well, you know what I'm saying? Like, because it's like if you have to verbalize it, then it's like accountability too. That's
Yeah,
why
yeah.
TradeZella or just some kind of dashboard,
Journaling.
just a
Yeah.
dashboard. Like, you could see that win rate dropping drastically. You could see the number dropping.
You
and
can
it's
see it from
not-
like a third person point of view almost.
and
Yeah,
especially
true.
with props too, because the thing with props is like people, when they blow that account's like, oh, it's forgotten.
Yeah.
True.
But if you have
Yeah,
everything
yeah, yeah.
linked in your TradeZilla, it's not forgotten.
It shows everything.
You know what I'm
Yeah.
saying? So like now you can really like have to log into that and look at it. You know what I mean? If you just blow prop accounts and you just throw them away, like your mind will just kind of like, push that to the side.
Yeah.
Yeah.
Like you said, I got the payout.
Yeah.
Rich,
'cause
post it up.
That's
Post
the
up the
thing.
payout.
That's the thing, bro. It's like that's also what's dangerous too, is because like, bro, you could blow like 1,000, or I don't want to say 1,000. Let's be more realistic. You could blow 5 1K accounts, right? Trying to flip it. Then you actually flip 5,000 to 10,000, and you completely forget about why you even blew those first accounts to begin with. And that's what's dangerous. And people could get stuck in that cycle because now you've blown that 10K account, you haven't even taken one single withdrawal. It's like a combination of so many different things, and so many different people are going to find themselves in so many different situations. You have to analyze your situation and how you can improve. And again, the only way to do that is through self-accountability.
Yeah.
Yeah, no, 100%, bro. 100%.
I think you have to have that time period to just like sit back and reflect and understand like what the hell is going on.
Yeah,
Like,
yeah.
You know?
You get tunnel vision.
You have to,
Yeah.
You get crazy.
It's like
And
real quick, yeah.
You
exactly,
can't you can't be comparing yourself
To
to
everybody
other
else.
people too. You have to literally only sit and talk to yourself and analyze your situation, how you can improve your situation. You can't just randomly, because social media, I mean, it could be such a great thing, but it's such a dangerous thing at the same time, because it's like you could easily go on and say, you know what, I had an $1,000 day today. It was absolutely phenomenal. Little did you know, you have 15 grand in your trading account. This other guy posted, I just made 30K today. It's like, okay, well now I'm gonna size up tomorrow
No,
to
but
try and make more.
On